Hello and welcome back to Investing for Generations, your channel for high quality stock research for long-term value investors. And today, as every weekend, I give you my weekly update for week 35 of 2021 of my real money portfolio. And with this portfolio, which I started at the 2nd of December 2019, I have a performance of 68% since. And here you get a full insight every week on this portfolio. And if you like the transparency, then just hit the like button, subscribe to my channel and follow me on my road as a long-term value investor. The topics today are the transactions I did last week, the received dividends, and the performance of this portfolio overall. So let's start. But before we start, don't forget to subscribe, ring the notification bell, and you will never miss another video. Thank you. So let's jump to the transactions of last week. First of all, I sold my Wells Fargo shares. I sold my Wells Fargo shares on September 1st for $44.20. I sold them with a performance, the gain of around 40%. And the reason I sold, I explained a little bit more in the video I also made about it on Wednesday, so check this out and you will understand a little bit better why I sold. Basically, I sold just because after all the scandals with Wells Fargo, now it seems like there could be another fine by the regulators. Who knows? But at least for me, enough is enough, and it feels for me like Wells Fargo will never learn this lesson, and so my trust was gone, and this was the reason I sold. Basically. But if you want to know a little bit better, just check out this video. And after this video, I got interesting comment by Kate Bruce, and he said, "I'm sorry, but this is one of the worst trades I've seen. This is beyond obviously oversold on pure uncertainty, unless you sold right after Bloomberg tweeted the news. Sanctions, if any, will not significantly impact the business. I loaded up on shares and longer dated calls today after having no position. Wells Fargo is now my second largest position." So first of all, thanks for this comment. I really like that. I really like to discuss my decisions, the stocks overall, the stock market overall. So I'm quite happy about that. And maybe on his view, he's right. Wells Fargo lost after this news around 10%, and it really seems like they could be oversold, and maybe he can make a good trade with that. That's absolutely possible as a trader. But I'm not a trader, and so my key points for me, I'm not a trader. I don't care about technical analysis. I don't care about if something is technical, oversold, overbought, whatever. For me, the fundamentals are important. And the fundamental with Wells Fargo is that I don't trust anymore. And the second thing is Wells Fargo at this levels right now, around $44, is not cheap anymore. When I bought Wells Fargo in the first place, it was around $30 and then even lower. And the risk and reward ratio was way better. Now a lot possible turnaround for Wells Fargo is already priced in. Now with a new uncertainty, for me, the risk is just too high. And with a higher risk and lower return, this makes no sense for me. And the most important for me is I can't trust this company anymore, and I don't want to be an owner of this business because I don't invest in stock prices, I invest in the business. I sold on September 1st for $44.20, and I'm quite happy with that, with the 40% of gain. And also remember, I also have JP Morgan and the Bank of Nova Scotia in my portfolio as a bank stocks, and I'm quite happy with them. I have way more trust in them. They are way more stable, more reliable, and I will hold these two positions for the long term, and so I will be invested in the bank sector anyways. And with the money I got from this trade, I bought Universal Health Services. I also made a deeper analysis for this company before. Check this out. You find the link here up on the screen or down in the description below. And in this deeper analysis, I went through the whole business model, the whole company, the management, calculated the intrinsic value, and just try to show you why I think that's a great company. And now I also decided to buy some shares of Universal Health Services. I bought 19 shares for $154.59. They are up now 1%, not important. I just happy to buy this great company. And this is, of course, is everything here for the long term, because I think Universal Health is a great investment with great management and for a fair price. It's maybe not super cheap, but it's a fair price, I think, for a good long-term return. And so Universal Health right now have a market capitalization of almost $13 billion with a P ratio of 12 and a very small forward dividend yield of 0.51%. We will see how this will work out. I'm quite happy to just have a little bit of share in the health sector as well. So Universal Health Services now is 2.39% of my portfolio, and it's quite likely that over time I will just buy a little bit more here and then of this great company. And by the way, if you're new to my channel, here you see the whole pie of my portfolio, and you will find deeper analysis to all of these companies on my channel. So check this out, and if you find value, as said before, just join me, subscribe to my channel, and help my little channel to grow. Then let's take a look at the received dividends. First of all, I got my dividend from Wells Fargo last time, and I received $15.80. And then I received my dividend from Intel. This was $58.73. So quite nice, little bit of cash flow into my portfolio. Last but not least, let's take a look at the performance overall. So first of all, take a look at all the positions in my portfolio and the performance, and you see Imperial Oil is the best performing stock in my portfolio with 85.3%, followed by JP Morgan, Ledger & Platt, Bank of Nova Scotia, and so on. And even if the Chinese stocks rebounded a little bit last week, Tencent and Alibaba is still in the minus. My third Chinese stock and my youngest position, Baidu, already up 14%. With Tencent, Alibaba, with the Chinese stocks overall, I have to have patience, and I will have. I explained this in a lot of other videos lately, why I think this could be a great long-term investment at current prices. And just to make this complete, here also a view on my closed trades. This is all the trades I made already since I started this portfolio at the 2nd of December 2019. And you see there are some quite good trades with Caterpillar 104%, Walt Disney 81%, and so on. And with that, I come overall to the performance of 68% since the start of this portfolio, which is good and which makes me happy. And the goal for the future is just to find good businesses for good prices, and then just hold as long as the business works and the price is not exuberant. That's the whole goal. If you like this idea, just subscribe to my channel, ring the notification bell, then we will see once or twice a week. So that's it for today. Thanks for watching. Then we will see again the next time. See you then. Take care. Bye bye.